deep down, we have this desire to make money and to get our money back. So what we end up doing is putting more money into subsequent trades to make that money back. Well, that's a sure recipe for disaster. Because if you think about probability and the tossing of a coin, okay, you toss a coin, heads and tails, 50% for each. If the first coin comes up as a head, the next time we toss the coin, what's the probability of another head coming up? Well, of course, it remains at 50%. And how about the third one? Well, it remains at 50%. Yet deep down we can think, look, we've had 3 losing trades in a row, we're destined for a winner. Just like the coin, who has no memory retention and couldn't care less about the 3 heads that have just been tossed. Likewise, the market couldn't care less that you just had 3 losing trades in a row. The market has no memory retention. And the market won't somehow shift the favour, the odds into your favour for the next few trades so you can make that money back. Just a very simple thing to do to protect your money, because that's the most important thing you need to be able to do. And let's finally talk about the method. So this is our analysis method, the way in which we arrive at saying, here's a company, let's buy some. Right? What process do we work through to get to that position? Pardon me. So what criteria or conditions do we want to enter a trade, whether it be stock, share, company, or whether it be a foreign exchange pair, or whether it be a CFD on an index or on something else. Okay, so what conditions do we use? You'll obviously have some software, and there's so much software out there now and tools and information which makes it a little bit easier. I think probably a problem we do have is there's so much out there that we're spoilt for choice, and that actually presents problems because there's so many software and tools available out there and information and the like. I'm a big believer in routine. Remember, we need to follow a plan, and a routine allows us to do that. And look, from my military background, I know routine is just essential. Having a routine ensures that everything you need to do gets done. And I'm a big one for having a checklist and just marking off things as I work my way through. How can you forget? There's no way you can forget. And certainly routine is the same. You cannot forget to do everything that your plan ensures that you need to do. Pardon me. We're now in a world where this is an issue. We have access to so much information, and people in this room have things in their pocket where you can just access anything. It's just ridiculous. And I think that presents a problem because there's so much information out there. You need to be able to have a process of managing that information flow and ensuring that we're not overwhelmed, because it is certainly easy to get overwhelmed. I just want to go through a couple more examples of the way we do it. And as I said, I'm a technical analyst. I just look at charts. I understand the basics, the fundamentals. It's just not what I do, and not something that I've done in my own trading for. I've never done it. So I'm certainly a technical person in that I look at price action, I look at patterns, and try to identify high probability trades. So all this analysis, we're not looking for any certainty, because you'll be sorely disappointed forever. There's never certainty in the market. Okay? But what we are looking for are particular criteria and conditions which lead towards high probability opportunities. High probability of having a profitable trade. That's what we're looking for. No certainties, because you'll be disappointed. Here's an example again of something that we've had in the report. We've had this in a couple of times. Real examples. Notice the first black line, it's at around 320, so that's a level of resistance for technical analysts. Right? So it's a level of resistance. It's literally the ceiling above our heads right now. Picture that as being 320. The price moves up and just bangs its head and can't get through. It tries it again to get, no, just can't get through. So what do we do in the report? We say, we've identified this area as resistance. We're not going to get into it now because we may never move beyond the ceiling. We may never move beyond 320. So I don't want to buy it at 310 and never get beyond 320. That'd be a waste of your time. What we do want to do is see it get to 330, realise that the ceiling has disappeared and the sky's the limit. Now, some of you are thinking, gee, that's a really good example. This is just recent times, mind you. So that first black line is back in December, January, had just gone 6 months ago. And we've seen what that price has done in the last 6 months. And of course, the doom and gloom of the market the last 6 months. And there's been quite a few companies that have done the exact opposite. And in that time, that's doubled in price. Now, I'll be the first to concede that, we obviously want to pull out examples that work for us. And there have been other examples that have done that, but then of course have failed and moved down. But that's, again, it comes back to the key principles. If we get into Centennial Coal and it moves in our favour, we stay with it. We hold the trade or the investment in that particular company. If anything, buy more. However, if Centennial Coal, or another example, had met our entry criteria and it just didn't work out and the price fell, we got out and we did so very quickly because we minimised the loss because we need to protect our money. I'm sure some of you in this room have bought stock at a particular high price and have seen it over time, years even, just fall and fall and fall and fall. Right back at the beginning, we think we can't take this loss. It's a hard decision to make. The unfortunate thing is, as the price continues to fall, it doesn't get any easier. In fact, the easiest it is ever going to be is right back at the beginning. All right, so that's the real key to, again, having a plan, having a structure, and having the discipline to follow that plan. Here's another example. Fortescue Metals, that again over the last 12 months has achieved extraordinary success, moving from $2, $3 to now above $10. If anything, if this does nothing else, I wanted to tell you that even when the general market is falling, there are always stocks going up. Always. There's 2,000 companies on the exchange, 2,000. We probably struggle in this group here to name 200 of them. So there's a lot of companies out there, and even when the general market is falling, there are always stocks going up. And there's just two simple examples that have not only gone up, they've gone up with some real pizzazz. These have both been in the report, we're proud to say. Not because we knew they were going to do that, please don't believe that. We didn't know they were going to do that. Of course we didn't. But they were doing the right things and moving up, and it just so happened that it did work out for us. So the fundamentals, again, this is not my area, this is the other guys in the team who do this, who don't even look at a chart. They present a company to us and say, what do you think of the chart? Because they've done all this information here, and they've gone through the company itself, the structure, its operations, whether it makes money or not, what sector it's in, how they view that sector, even who's on the board of directors, even the key staff within that company. They look at everything when it comes to looking at a particular company fundamentally. And one thing the team has started doing recently is when managing directors and the like have been in Melbourne, or perhaps their company's based in Melbourne, we've been going out to interview them and talk to them about their companies.